I'm Joe Kuchinka. For those of you who don't know me, I'm President and CEO of Proverus. First of all, I want to say thank you for putting your trust in the Proverus team for your insurance needs. It really means a lot to every one of us on the team. I wanted to make this video to talk about what on earth is going on in our industry right now. Why are we seeing some of the crazy prices that we're seeing when it comes to homeowners insurance? If you haven't opened your bill yet, I opened mine. If you haven't opened your bill yet, we're seeing things like 30, 40, 50, up to 70% increase on homeowners. What on earth is going on? What's causing all this turmoil? Why are things going just so crazy right now? I want to talk about that. The first thing I want to address is the frequency of claims. In 2023 alone, there were 25 weather-related events across the United States through the month of October that exceeded $1 billion in property damage. How does that compare to previous years? Well, in the previous 5 years, that average was only 18. And in the previous 30 years, that average was 8. So in the first 10 months of 2023, we're 3 times the amount of claim frequency of our 30-year average. So that's the first thing that's driving these costs. The second thing is the sheer cost of repairs. We're seeing inflationary increases on materials. We're seeing increased wages, but we're also seeing more and more contractors that don't have the level of integrity it takes to understand what just a reasonable profit margin is. We're seeing what used to be a $15,000 or $20,000 roof is now a $40,000 or $50,000 roof, over double what it was just a few short years ago. And some of the material costs have actually come back down. So we're wrestling through that side of it, the sheer cost of repairs. And then the third thing that really is driving all the instability amongst the markets, and that is what we refer to as a global reinsurance shortage. What on earth is a global reinsurance shortage? It's no secret that insurance companies buy insurance, and they buy it from a reinsurance company. As these global reinsurance companies have been taking all the extra hit of all these claims that have gone over that $1 billion threshold, and every company was different. We've had some smaller insurance companies that may have had a $5 million per catastrophe deductible. They've been mandated to move that to a $30 million deductible, 6 times that of what they had previously had. Another one of our carriers, which I'd call a super regional, they were at a $30 million per catastrophe loss, and now it got moved by the insurance company to $60 million. So when companies need to begin to reserve more dollars and set more dollars aside for catastrophe claims, because of the regulations on what the reserve ratio can be for dollar of premium written versus dollar of how many dollars they need to have set aside for paying claims, the only thing they can do is increase those rates. In addition to those self-insured retentions or those deductibles going up for the insurance carriers, the price point for the reinsurance has also gone up, and oftentimes they have a lower limit that they're able to buy. So if they still need a higher limit, they have to go to another market to buy that, and it's more expensive there as well. So there again, we're looking at frequency of claims. We're looking at the increased cost of repairs, and we're looking at the global reinsurance shortage. So all of that said, what are insurance companies doing to try and get their sea legs underneath them? What are they doing to be able to try and stabilize themselves as a carrier so that they're there for the policyholders, as well as, what's just the industry, where's going to be the new normal in the industry? Well, here's some of the stuff that we're seeing that insurance companies are sliding in and we're paying very, very close attention to. Switching roofs from replacement cost to actual cash value. We're seeing that it's been around mandatory 15-year-old roof goes to actual cash value with certain carriers, but we're actually beginning to see new business come in where carriers are saying, if you're going to write a new policy with us, we're automatically going to put it at actual cash value, and there's no option to get replacement cost on that roof. That's a big deal, big change in the industry. What else are we seeing? We're seeing mandatory wind hail deductibles. That could be just a higher flat dollar amount, like If you have a $1,000 deductible, that could go to $2,500 or even $5,000. We're also seeing percentage wind hail deductibles get slid in there. So, and that's not a percentage of the claim, that's a percentage of the value of your house. So if your house is insured at $500,000 and the insurance company mandates a 5% wind hail deductible, that's going to put it at a $25,000 deductible when a storm comes through. That can very much be a challenge because not a lot of people have an extra $25,000 laying around in the event of a hailstorm coming through. What else are we seeing? We're seeing cosmetic exclusions. What's a cosmetic exclusion? Well, if it's dented from hail, but its functionality is not compromised, it just doesn't look as pretty, that is a cosmetic exclusion. What other things are we seeing? Well, we're seeing carriers restrict their appetites, where they're saying, you know what, on new business coming to us, we're going to be very picky. We don't want any previous claims. We want credit scores of a certain amount. We want. Getting very, very more restrictive in their appetite. We're also seeing carriers exit the market. In some cases, insurance companies have said, we don't think we can survive this if we try and go any farther until some of the stuff levels off and changes. So they're literally pulling out of the market and saying, we're no longer going to write homeowners in the state of Minnesota. We're no longer going to write homeowners in the state of Wisconsin. So we're in a spot where we're seeing carriers exit. So some people are saying, hey, I just am going to need to shop my insurance. I'm going to need to look at another carrier. Traditionally, that made a lot of sense. Right now, however, we're watching that very, very closely. We're paying attention to which insurance companies have taken their rate increase already and which ones haven't. Because here's the challenge. If you move from one company to another that hasn't taken its rate increase yet, and now that rate increase, that when they take it, exceeds where you were at previously, you may not be able to go back to where you were. So our recommendation overall right now is to allow us to just be paying attention to what's going on. There's times we're moving people around, but we're being very, very careful in doing so because we don't want to put anybody in a compromised situation when we, after it as an unintended consequence of that move. So I wanted you to know what's going on in the marketplace, what we're paying attention to very, very closely. I'm hopeful that the industry is going to get its sea legs underneath them here soon, and we're going to get some stabilization not only in pricing, but stabilization in coverage form so that we can understand what that new normal looks like. I don't want to have us become like the state of Florida where you can only get your wind coverage through the state, or the state of Colorado where there's a mandatory 10% wind hail deductible and everything. I'm hopeful that we can get through this. So I understand this is not a positive thing to be hearing. It's not positive for us to be helping navigate through this either. However, it's times like this when we need to stick together and hunker down and ride out this storm, because it is a storm and it will pass. Any questions that you have as you're navigating your renewals, as you're trying to figure out what this looks like, we are absolutely here. Send us an email, give us a call. We're happy to help you navigate through this as we're navigating through it and paying attention to what's happening in the industry. So again, thank you so much for being a Proverus customer, for trusting the Proverus team with your insurance needs. And again, any questions, don't hesitate to reach out to the office. Thank you.